Welcome to this week's edition of Trade the Trend. I'm Jason McIntosh. It is Friday, the 19th of November 2021. Trade the Trend, well, it's a weekly video discussing the latest trends and opportunities in the markets. As always, it's just general commentary and it doesn't take your personal situation into account. Alrighty, with that said, time for the first chart. So the S&P 500, well, look, it's really been a pretty quiet week overall. Not a lot of action to speak of during this period here. So, oh look, and by the way, make sure you hang around at the end. I've got a mystery stock that I'm going to tell you about, an interesting stock that came up during the week. But yeah, now just back to this, back to the S&P 500. So, look, it's very much along the lines of what we were talking about last week. We're talking about how it had this big rally through here over several weeks, and it was very much unchecked. The market hadn't done any work to consolidate that, and that's pretty much what we were looking for, and that's kind of what we've got. And I thought we might have seen a little bit more downside in this consolidation period. I thought maybe we would have seen the market like pull back a little bit more down towards here. So far, that hasn't been the case. It's going to be interesting whether the market can just rally from here or whether it does still need to do a little bit more work. And what's interesting to look at is I'm going to jump to the S&P 500 equal weighted index. So this is equal weighted. So the smaller stock has the same impact as the larger stock. And what's interesting here is that this has actually played out a little bit more like I thought. So we've had this rise and then we had more of a pullback. And so what this suggests to me is that it's the really the big mega caps which have taken control again and are driving the market. And there's a little bit of look, there's a bit more back and filling going on in the broader market. And I'll show you another example what I mean. When we jump over to the Dow Jones, you can see it's been even weaker. So you can see in the Dow we've got the classic ABC zigzag pullback, and so it's quite different to what we've seen in the Nasdaq. And also we can put some Fibonacci's on here. Let's just put the fibs of the latest move, and you can see it's pretty much come back to the 38.2. That's kind of what I was looking at for the S&P 500 to do. It hasn't done that. It's been relatively stronger. But what has happened here with this price action is that we've actually got some divergence coming in. So that's where we've got the high, and then we've got a lower high here during the week, whereas the S&P 500 is actually like just nudged up to a new high. So there's a bit of divergence, a bit of disagreement in the markets with how they're trading. So that's not, look, I don't think that's a sign of trouble by any stretch, but I think that's possibly a sign that there is some more work to do over the near term. That maybe these markets aren't quite ready to rally and move on. But look, like I say, I don't see any immediate signs of trouble in these markets, and I think it's very much a case of the bulls remain in control until we see otherwise. And look, I often talk about the dangers of trying to pick tops in these markets. Is look, as you'll see so many people trying to call the top in a market or call a low in the market. It's just such a dangerous strategy because most of the time I find the market just rolls over the top of you and keeps doing what it's doing. So that's why my preference is to stay with the overall trend. Don't try and pick tops. It's a great story about one of the great market analysts, a value investor by the name of Jeremy Grantham. He's picked all sorts of highs and lows over his time, but he's often early with his timing. I remember he made a big call on Japanese stocks in 1989. Said they were heading towards this peak. There's going to be a bubble. There's going to be a crash. He was right, but he was a year early, and in that year that came after his call, the market almost doubled. So look, and I've learned that from my own experience. Don't try and pick the top. Let the market tell you when the top is in, and take it from there. So for now, in the equities, I think it's a case of staying with that trend. So let's jump over to the local market briefly. Look, same. I've got this resistance band we drew in last week at around 7,750. Market's still struggling to get above there. It's the same story as last week. If you're unless you're a day trader and these daily movements are an issue for you, look, I don't think it really matters whether this market breaks higher this week, next week, or next month, whenever it may be. If you're using a process or a strategy of using wide trailing stops, as very much like I do and my Motion Trader subscription service does, if you're using those wide trailing stops, then look, it's often a case of just waiting out these consolidations and sideways periods for the next trend to reveal itself and to then potentially be in the position to make your money there. So look, for now it's a bit quiet, bit dull, but that's often how markets are, and we'll get the trends when the trends are ready to reveal themselves. Okay, now look, if you're getting some value from this, please hit that like button. Let YouTube know you're getting value. Then YouTube will show other people, and if people are watching, well, I keep making the videos. And also hit that subscribe button if you haven't already, and the bell notification, and then YouTube can tell you when I put up a new video. All right. Okay, so let's look at a few commodities, well, a couple of commodities. I want to start with just briefly with silver, because that's been interesting over the week. I've left in the lines I drew last week, so we've got this big sideways consolidation. It's been in for, look, a bit over a year now. Very big consolidation. Potential head and shoulders pattern we've been talking about. So you've got the two shoulders and you've got the head. The neckline, this was very interesting last week because we got that break. So let's zoom in a little bit. So we got that break a week or so ago. And what's been interesting the last week is we've started to get a return move down to the support you get at this neckline area. Now, what's really important now is what happens here. So this is really the make or break for this pattern, not for silver overall, but just at least for the near term. It's now either going to rally off this base, and we're going to see that market move up to potentially the upper end or the upper half of this big consolidation range it's been in, or we'll see this has been a false break and the pattern will just basically fail if the market ends up doing something like this. Well, it just takes this head and shoulders out of play. Look, as I've said in the past, head and shoulders are a bit hit and miss. Sometimes they work really well, other times they don't. But it's all about identifying possibilities, and there is a possible good move higher. And this is one of those asymmetric sort of situations where you don't need to give it much room before you decide, well, the timing's not quite right. But if it does go, it could be quite a good move. So look, I'll continue to watch silver with plenty of interest. And look, it could be a case of the whole precious metal sector setting up. But we'll just have to wait and see how this continues to play out. Now, I'm going to had a few requests to have a look at uranium, because that's been a focus point over the last few months. It's been really been an interesting area. So we'll start by looking at the weekly chart. So just looking at the weekly for uranium, and look, it's been a really strong move we've had over the last look, this is probably a month and a half, 2 months ago now. It was a really strong move up, and big moves often don't just keep adding to themselves and going up and up and up. There's got to be pauses and consolidations along the way. At the very height of a market, you might see, you see these rapid advances, but this was after a long building phase, which we don't have on this chart. So look, I'd expect, well, I'd think probably there's room for some consolidation here. I don't think there's a hurry, basically, with uranium. I think it's a great medium to longer term story, but look, there just may not be a rush. The actual uranium price itself, look, it's possible it does. You could even see it pull back before it really gets going again. That's not to say that's a prediction, but that's the sort of thing which could happen. This is looking like it does look to be struggling here to push higher the actual uranium price itself. So maybe that's a sign that there's some more work needed. But I think the overall structure, when you look at it on this weekly chart, I think, well, on the weekly chart, which we just had, this is a daily, I think the overall structure is very positive and supports, I think, significantly higher prices over the months and look, even over the years ahead. And Just quickly jumping to some of the stocks. So this is the stock I own. It's the North Shore Global Uranium Mining ETF listed in the US. I'm in from around here, and I've been riding this trend. I've been using my wide trailing stop, the motion trade away, which I keep talking about, giving stocks plenty of room to move, plenty of breathing space, because you don't want to get knocked out during these pullbacks. And that was a larger pullback, which I was able to sit through, because you want to get this big trend. That's where all the money's made. And we spoke a few weeks ago. A few weeks ago, I was talking about we had this big move up and we had the pullback. And I was talking about it around this point, saying, well, okay, we've now got like a 50% retracement. This is potentially like a good risk reward entry point. And it turned out that that actually was a pretty good point to jump on. I've been asked, look, would you jump on now? And it's tricky. Look, the risk reward is just harder up here. It's like it feels like maybe these markets could do some work. It's just not as attractive as down here, or like even further back down in this region. So I want to see how this market develops before I consider adding to my positions. They could well continue to run, but the risk reward dynamics of getting in now just isn't as appealing to me. And looking at some of the stocks, this is an Australian listed one, Boss Energy. It's been doing really well. There's a pullback we were talking about in the fund I'm in, and Boss is up near its highs for this run. So that's looking really good. Then you look at a company like Deep Yellow, it's not doing as well. It's quite a fair way from its highs, and this is why I played the ETF, because I'm getting a basket of stocks and it doesn't rely on me picking the right stock, because that's always a danger. You get the big view right, but you're getting the wrong stock. And I've had that happen many times in all sorts of situations. So that's why I'm in here in the ETF on this particular move. I might play a few of these smaller uranium plays, but my main game for me is in the ETF. Looking at Paladin, another local stock, a bit stronger than Deep Yellow, not as strong as Boss. But then you look at one of this Canadian listed one, and look at what that's done. Like this is that pullback I was talking about, and it's almost doubled. Well, actually, probably it's more than doubled since that point. So this stock, Uranium Energy Corp, it's probably in that ETF I'm talking about. So that's the advantage of the ETF approach, rather than trying to play it miner by miner, because you do get the wrong ones probably quite often. And the way these things work out, it's no one knows where the big hit's going to be. Okay, lastly, let's have a look at this stock I was talking about. So this was an interesting one. It came up in Motion Traders scans just this week, and it's in the precious metal space. It's a stock called Zimplants Holdings. It's Zimbabwe based. It's involved with the platinum metals, so platinum, palladium, and another number of others. Also some gold and silver, some copper in there. But the platinum, palladium, they're the main plays. So this is interesting. I always like when these stocks come up and you look at it and you see there's an interesting chart pattern there to support the strength. And this is your classic classic bullish wedge type formation. So I've had the big move up, then we've gone into the large consolidation, which has been 6-7 month consolidation, and we've recently just had the breakout. And what's interesting is this breakout happened on some pretty decent volume, so it gives some extra validity to that break. So that's an interesting thing on its own. And then you can do some look. You never know where these things could go, but you can give yourself maybe some rough ideas by doing some measured moves. So if we use this point here for that last run up, that would project us up to around 36.5, which is, I think that's probably around 50 odd percent from where we are now. Yeah, it's about 50% from current levels. So look, that's not a target. It's just a projection of what could happen, and it could go even further. Let's just have a quick look at the weekly. Tell us whether that shows us anything of interest. Yeah, look, that's interesting. Like this big period in the doldrums as it corrected from the the last big advances that it had, and this move's been building. It's been accelerating. It's yeah, look, it could will have some upside. So look, I've just got to little position in it. Yeah, see what happens. It's interesting pattern. Interesting pattern. Yeah, I just like to bring these patterns to your attention when I see them. They're of interest, and yeah, you never know. Never know what happens with the implants. Alrighty, well, let's call that a wrap for the week. Thanks for joining me. Let's come back next week and try and put all the pieces together. Hope you got some value. Please hit that like button and look forward to joining you next week.